Welcome back to John Orfer's Note. Japan's launched an all-out assault to try to reinflate its economy. Its central bank has announced a massive bond buying program which will drive investors into riskier assets and overseas. The question is, what will the effects be elsewhere, and could it play to the advantage even of the crisis-hit eurozone? With me to discuss all this is Simon Derrick, who's the chief currency strategist at BNY Mellon. Simon, I know you've been watching the flow of funds very carefully, and you've brought along on our first chart something you've been watching very carefully, which is, well, explain what we've got here. We've got the inflows and outflows, eurozone and Japan.
Yeah, that's absolutely right. What we're looking at here is data that's drawn from our custodial system.
Right.
And so what
Your
we're
clients.
looking at, our clients, exactly.
Yeah, what they're doing.
And what we're looking at is the cumulative buying and selling of euros and yen over the course of the last 2 years.
And have they been moving out of Japan?
Absolutely. I mean, and one of the key stories through the latter part of last year was very much that this is what they were doing. So from November onwards in particular, remember the time when Mr. Abe was first coming in, we saw some quite aggressive selling of yen.
That's the dip at the end.
This is the dip at the end, the blue line. Yeah. What's interesting, though, is that over the course of the last month or so, we've not been seeing that. If anything, we've seen a minor rebound back in. And what we've not seen since we saw the announcement from the Bank of Japan last Thursday is really any fresh selling of yen. Now, that doesn't mean that people aren't selling yen, it just means that our clients aren't.
Yeah.
And what it probably means is it's probably more the hedge fund community that's selling rather than our real money clients.
Well, I was going to say, because we have seen effects, for instance, in US Treasury yields and eurozone periphery government debt yields as well, which have come down quite sharply, but they don't seem to match up with your data.
Absolutely. And again, I mean, I think one of the interesting points about that is the other chart here, the red line, is our euro flows.
Yeah.
And virtually no sign of anybody actually buying euros. What's quite interesting
because
is
that's also being
absolutely
outflows out of the eurozone.
Net outflows taking place all the time.
Yeah.
So real money players, the investment managers, the central banks of this world, looking at the longer term story for the euro and not really liking it. Not the first time it happened. If we go back to November, we also didn't see a great deal of buying from the real money community. So what this looks like is it's really about the hedge funds rather than the longer term players that have been involved in this trade.
The hedge funds anticipating that the Japanese investors will be moving into these, but getting in first.
Absolutely.
Does that make it sustainable? I mean, could it flip back? I mean, if the Japanese investors don't do as we expect?
And I think that's the key point. If Japanese investors don't do as we expect, then the likelihood is that the more speculative community will rush to take their profits, and that perhaps this move out of the yen won't be as sustained as perhaps some people expect.
Let's look at our second chart, which is actually the yields on the eurozone peripheral government debt, and they do in fact show, Spain and Italy at least, quite a dip.
Absolutely, and I think the point here is that particularly since we saw the move by the Bank of Japan, we have seen yields starting to drop in Spain and Italy. Of course, Portugal, which has got the story with regard to what's happened with the Constitutional Court, a little different.
They had problems with their bailout program at the moment.
Absolutely, yeah. And what we're seeing, therefore, this is probably the effect of that speculative money going in. But of course, what we know about the eurozone is there are still substantial problems. We know about Cyprus hasn't been dealt with. Italy and the election hasn't been dealt with. Portugal, of course, hasn't been dealt with.
Just to be clear, that's not Japanese money going into Spain and Italy.
I think that's almost certainly probably going to be the more speculative end. It's going to be the hedge fund money going in, looking to pick up a higher yield. We aren't hearing anything yet about Japanese investors starting to put money in.
Well, so the big question, Simon, then is, do you think Japanese investors will be buying into the eurozone periphery? Will they be the saviours for the eurozone periphery?
I think this is very open to question right now. I think it actually depends on what happens in the Japanese economy. If we start to see a few problems there, maybe, or we start to see problems elsewhere in Asia, perhaps Japanese investors will be a little more cautious than they have been in the past. I think we've got to wait and see. If we start to see those flows out, then maybe, yes, they will be the saviour, but right now, far too early to say.
Thank you, Simon, very much. So perhaps a bit of hope then for the eurozone crisis-hit countries, but don't bank on it.